Good morning and good afternoon and good evening, everybody. We will be starting this meeting in just over 1 minute from now, waiting for people to log on. So warm welcome to everybody for this small meeting, 1 hour meeting on a practical guide to issue Bluebones, which I think many people find very exciting in these challenging times, but where we are still determined to deliver on sustainability. So we will start in a minute. Very good, everybody. Welcome. And again, good morning, good afternoon, and good evening. I'll give people half a minute more to log on. It's quite a few people have shown interest to take part in this meeting about issuing blue bonds. So a warm welcome to all of you. Okay, my time is just 1 minute past 3 o'clock Central European time. So again, good morning, good afternoon, and good evening to everybody. I know we have people from really all over the world showing interest in taking part in this meeting. It's a launch meeting of a practical guides on issuing blue bonds. It's part of our financial track at the UN Global Compact and the action platform for sustainable ocean business. My name is Erik Gjerski. I'm the head of the platform, and we have since May, since the launch of the Blue Bond Framework paper, been working with a large community of stakeholders to really see how can we build a market for blue bonds within the existing global framework out there and the global standards of ICMA and the EU taxonomy, etc. The reason for this is, of course, there is a huge interest both from investors and from corporates to identify what is really on the track towards the 17 SDGs and the Climate Paris Agreement ambitions. How can we together finance and deliver on those ambitions? How can we navigate on what's green and what's sustainable in the ocean industries? Complex industries from aquaculture, shipping, energy, seabed, resources, etc. These are some of the topics we're going to discuss today. We have speakers from banks, from international financial institutions, from second-party opinion verification agencies, from stock market, and from issuers. But first of all, we have the CEO and Executive Director of the UN Global Compact to open this meeting, Sanda Ujiambo. Please, the floor is yours, Sanda.
Thank you very much, Eric. And good morning, good afternoon, good evening to you all, wherever you may be around the world. I can certainly see there's great representation. So, Excellencies, distinguished guests, ladies and gentlemen, it's truly my pleasure to welcome you to this very important Blue Bonds webinar. As we know, the 2030 Agenda for Sustainable Development provides a guideline, a path for reviving economies, bringing health and opportunity and resilience so that we can create the future that we want. And I believe now more than ever, wherever we are around the world, we are singularly united on creating a future that builds on resilience. And we know there's no time to waste. I think as we all collectively look at recovering better from this current crisis, we must scale up action to recover stronger and also continue to contribute towards the achievement of the Sustainable Development Goals by 2030. Of course, critical to this recovery is financing and the role that the finance sector can play in catalyzing investment and business opportunities around the Sustainable Development Goals. We all know, I'm sure, that implementing the SDGs will open market opportunities valued in trillions of dollars across sectors, across industries, and across geographies. But we also know that there's a huge financing gap to get us there. We know that the SDGs have been increasingly incorporated into financial markets as investors are now placing much greater emphasis on environmental, social, and governance performance. Many investors have also seen that companies with strong ESG performance, sustainability, and transparency have shown great resilience through the pandemic. So it is in this context that we believe that investing in sustainable ocean business can be both a good investment as well as have positive impact on our progress in sustainable development. Indeed, investment in scaling up offshore renewable energy, investments in sustainably sourced ocean protein, investments in decarbonizing international shipping, just to provide a few opportunities, can really provide the necessary resources for our growing population, while also supporting the transition to a low carbon future. But this will require significant shifts in investment decisions and actions in order to mobilize large-scale financing. And the bond market, certainly the largest asset class in the global financial market, can play a significant role in funding these business opportunities. So building on the work that has collectively been done on the Sustainable Ocean Principles Action Platform and the Sustainable Ocean Principles, Blue bonds can certainly guide good investments and increase sustainable science-based ocean solutions. It is truly our hope that in these discussions today, building on the work that we started in May this year and in future deliberations, we're able to create significant opportunities for the issuance of blue bonds to drive investment as well as deliver on this very important agenda of sustainable development. I look forward to today's discussions. Thank you very much for your kind attention, and thank you for your commitment and participation in today's event. Over to you, Eric. Thank you.
Thank you so much, Sandra, and thank you so much for taking time to open this meeting. We really appreciate that. It's the 20th anniversary of the UN Global Compact this year. It's the 75th anniversary of the UN. What's better than really come together and show that the private sector is a global and united sphere for change and impact. It's a decade of delivery, and that's why we are moving into the blue bonds discussion. We really need delivery and action. So I will ask, the practical guidance was just now launched in the chat. So now you can actually download it and have a look at it. And many of you have contributed extensively to this little production. And I think it's wise to say that this is a step towards building a blue bond market within the existing frameworks that's out there, within the green bond and sustainable linked bond principles of ICMA, within reflecting the EU taxonomy as they develop. The idea from our side was really to have a strong reference paper on how issuers in the blue sectors, in aquaculture, in fisheries, in shipping, in ports, in oil and gas, in offshore wind, etc., can have a set of targets, a matrix to refer to, so that second party opinion agencies, financial investors and corporates can agree on what is an eligible target or not. Many of these are already ongoing. We have seen, and we will hear more from some of the speakers today, about green bonds being issued from aquaculture companies, shipping companies, etc., which is highly relevant and important stepping stones. But this needs to grow much more. We need much more private and public capital into these projects and companies that are directly delivering on the global goals. And it's important that we recognize not only the climate impact, but also the full environmental scope, social dimensions on human rights and labor, and of course, the economic and transparency in that dimension, fighting anti-corruption, etc. That's why we at the UN Global Compact think there must be a foundation, principled foundation based on the UN Global Compact and principles and the Sustainable Ocean Principles, but also that we look at how can we create more good solutions, how can we produce more sustainable food, more green energy, more efficient transport for a growing world population. That is the mindset of the practical guide, and this is some of the discussions we're going to have today. I'm now going to give the floor to my good colleague, Howard Lee. He's part of the Sustainable Finance Platform at the UN Global Compact in New York, to tell us a bit more about the landscape that we are entering into. Please, Howard, the floor is yours.
Thank you so much, Eric. And I'm going to try and share my screen. Hopefully you can all see it here. Give me a second. Okay. Give me a thumbs up, Eric, if you can see.
Can't see it yet,
oh.
but it's probably there in the, there it is. Yeah,
all right.
There we go.
So let's launch that. Perfect. So as Eric kindly introduced, my name is Howard Lee. I work on the sustainable finance team here at the UN Global Compact, and I look after many of our engagements with investors, banks, standard setters, and other market participants. Echoing Sanda and Eric, we're delighted to welcome so many distinguished speakers and participants to this webinar. Just to give a little more context for our work, within our Sustainable Finance Action Platform, we looked at several potential innovations over the past few years that could help the sustainable bond market scale in terms of both volume and impact. And we launched a SDG bonds report about 2 years ago, which details an example of what would later become the first sustainability linked bond. Combined with the Ocean team's excellent work on mapping and valuing opportunities in the blue economy, we wanted to help create a more consistent understanding in the market of what could be a market for blue labeled financial instruments. So to the next slide. So why blue bonds? We saw many different opportunities in this space. Simply put, I think the UNGC has the SDGs at its core. And we see a significant gap in terms of financing required to achieve the SDGs associated with oceans, water, sanitation, clean energy, and many other areas connected to the blue economy. Globally, the market value of marine and coastal resources is estimated at about $3 trillion per year. And from a financing perspective, we see an opportunity for signatories of the Global Compact to tap the sustainable bond market to fund new projects and innovations that will help us achieve the SDGs. Through our recent Blue Bonds project, we actually found a strong appetite amongst investors and banks for blue-themed products. We also saw a growing maturity and level of understanding amongst market participants and a lot of strong enthusiasm from structurers and other market players to create frameworks to help them understand and promote and invest in a more sustainable ocean. And I think we'll hear from many of those individuals today. Finally, we also saw how many investors and other data users are increasingly looking at bond issuers as overall sustainability perspective and performance, and how a well-designed sustainability program or a blue framework could actually help boost not just the success of your bond issuance, but also improve the company's overall visibility, brand recognition, and even actually have a positive impact on forward-looking equity valuations. I've shown this chart in previous, talks before, but I think it always bears note that, the sustainable bond market, I think everyone knows, has been growing exponentially in the past few years. The green bond market recently broke the $1 trillion mark. The combined volume of green, social, sustainability bonds and loans recently surpassed 2 trillion. And actually, the COVID pandemic hasn't slowed this down at all. It's, in fact, accelerated investor enthusiasm for sustainable fixed income. What's important to note actually from this chart is that ESG investors are actually increasingly sophisticated when it comes to thematic bonds. You'll see that there's a growing diversification in the types of instruments that are issued. So, in the beginning, it's primarily green, and then it expands to social, pandemic bonds, sustainability bonds, and SDG linked bonds. And in fact, if I extend this chart to 2020, you would see that year to date, the majority of volume has actually been in social bonds and pandemic bonds. We've also seen a slew of sustainability linked or SDG linked bonds come to market in different currencies. And so if you look into the bond prospectuses themselves, you'll see there's a growing range of interventions that these bonds are funding. And there's actually a lot of scope for these bonds to contribute to ocean or water related outcomes. And I think that was one of the key pieces that we saw of this project. Just to summarize some of the highlights from our paper, first of all, the objective was not to create a new set of principles, but to begin building consensus, as Eric said, around what constitutes a blue bond and how we can help issuers gain access to this market. Taking all that into consideration, our mapping indicates a lot of potential for a blue bond label that's actually nested under the green or sustainability linked bond principles and allows for the eligibility criteria to be a little more expanded to account for the needs of ocean going or marine based companies. According to our focus groups, Many companies in the ocean industry didn't always find that the green bond label or the green bond use of proceeds or packaging, that they didn't always have the appropriate assets to fit neatly into that description. So our goal was to help both issuers and investors develop a wider perspective so we can open up the market to more companies from more sectors. And we'll hear from the IFC. We've worked with the IDB and other multilateral banks and to identify examples of a few non-traditional sectors like marine ecotourism, aquaculture, sustainable packaging, and so on, that could actually have a big impact on sustainable ocean development. Finally, just to summarize the paper itself, you'll have to read the full thing for the full description, but I can give you the highlights. In our report, we outline 3 steps for issuers to get started. The first is to utilize existing standards wherever possible. So that means the ICMA principles or the Poseidon principles always benchmark to existing standards that are recognized in the market to guide the design of the bond program. Secondly, we encourage issuers to develop bond frameworks with credible and measurable impacts on SDG outcomes related to oceans or water. Some of these already exist in places like the EU taxonomy or other taxonomies, and the UNGC will work together with industry to deep dive into more sectors as this work continues on specific analysis and different sectors. Finally, we think it's important for issuers to establish mechanisms for transparency and disclosure and reporting through second-party opinions and impact reporting that is aligned with the UN Global Compact guidance and other established metrics and standard setters, including the GIN, SASB, and so on. So in closing, I don't want to take up too much time because I know we have an exciting panel of speakers ahead. I hope you're all as excited about the Blue Finance opportunity as we are. Over the course of the next hour, I think you'll have a chance to hear from many experts who will deep dive into specifics that I've introduced here and take us through all these aspects in more detail. So for now, I'll hand it back to Eric to take us through the rest of the program. Thank you.
Thank you, Howard. And that was a very good summing up. And as Howard said, please reach out to us and engage actively, both in the Ocean Business Platform, but also the Sustainable Finance Platform. They have a CFO network, which is super interesting. So sign up to that and take part, because this is evolving politics and business going forward. It's a good segue also to now introduce Andreas Wolheuter from the World Bank system. He's a climate finance officer at the IFC. So Andreas, please, the floor is yours.
Thank you very much, Eric. Let me try to share my screen here for this presentation. You should be able to see it now, right?
Yeah, very good.
Okay, perfect. So yeah, good morning, good afternoon, good evening to everyone in the audience. And thank you again to the UNGC for the invitation to speak about this exciting topic in today's webinar. My name is Andreas Wolheuter, and I have the great pleasure today to present some of IFC's work on blue bonds. So in the 5 minutes or so that I have, I would like to focus on 3 things. One, why blue bonds are important for us. 2, IFC's role in creating and scaling the blue bond market. And 3, to give you some concrete examples on what exactly we mean by blue finance. So before I do that, let me give you a brief background on IFC. So IFC, as you may know, is the private sector arm of the World Bank Group. And we've been very active in the climate finance space in emerging markets over the last 10 years or so. Especially when it comes to green bonds, where we've been playing a whole variety of roles, as you can see on this slide. We've been issuing a lot of green bonds ourselves. We have our Treasury Department issued about 10 billion of green bonds in the last 10 years. We've invested alone through our financial institutions group about 12 billion in climate finance related investments. We're also a market creator. We launched innovative green bond funds with Amundi and more recently with HSBC. We're also advising clients in the process of issuing green bonds and other thematic bonds. We're a member of the executive committee of the ICMA Green Bond Principles, and we're also working with regulators on guidelines and taxonomies as needed. So why blue bonds? For us, blue bonds are really where green bonds were about 10 years ago, right? A blue bond for us is an instrument that really can help us address some of the issues that we see today related to ocean and water. But at the same time, they can help us or help issuers tap into the business opportunity in this space, right? So as we know, the sustainable blue economy, Howard said this earlier, is valued at approximately $3 trillion annually. At the same time, we know that oceans are heavily overfished, that about 1 dump truck per minute of plastic waste enters the ocean. We also know that about 80% of wastewater is not treated adequately, and that by 2050, about 1 in 4 persons are expected to suffer water shortages. So all these issues are particularly true for emerging markets, where some of the countries today already face huge challenges in this regard. So we think that with blue bonds are really a great instrument to tackle some or address some of these issues, right? So what is IFC doing to help create and also scale this market? I just wanted to highlight 3 things. So at IFC, we launched an internal initiative about 9 months ago to work on this topic. And one of the areas that we're or started to work on is the blue finance taxonomy, right? And here it's important to note that we're at IFC, we're following a use of proceeds approach. And we're working with other stakeholders to expand the asset class to cover 2 areas, really. One is on protection of marine ecosystems, and 2 on sustainable water management. And I will provide some concrete examples on this in just a minute. The reason why we think it is important to expand the asset class is that for the first blue bonds that we have seen in the market, the blue label was fairly narrowly defined, right? And therefore we saw rather small issuances. And we think that by expanding the asset class will allow for bigger ticket size issuances. And that's one way to help scale the market. And the blue finance taxonomy really is essentially a list of project examples that can come under a blue bond. And it helps potential issuers to find blue assets in their portfolio and pipelines more easily. On the second point, on demonstration transactions, so we're currently working together with a few financial institutions clients globally to help them issue their first blue bonds. And this topic of demonstration transactions is really very important. We have seen this as well in the green bond market over the years, that often it just takes one first bold bank or corporate issuers for then others in the sector or in the market to follow and issue their own blue bonds or green bonds or whatever bond we're talking about, right? And what we do, similar to the green bond support that we're providing, we work with our clients throughout the whole process of issuing such an instrument. So really from identifying blue assets in portfolios and pipelines to helping set up frameworks all the way through to impact reporting. And the full package next to this advisory or technical assistance work can also include IFC as an anchor investor. And potentially we can also bring in other investors alongside IFC in these transactions. The third point here listed is on advocacy. So we're trying to really advocate for this topic in events like this one, but also in other workshops, conferences, to really try to engage the private and public sector stakeholders in this space. We also collaborate with our colleagues who work on the public sector side of the World Bank Group to help bring this topic on the agenda of regulators. And similar as with the green bond market, it really takes a village, right, to create this market. So as I mentioned, I just wanted to give you a brief overview of what we think could be some of the sectors and project types coming under Blue Bond. So as you see here, this is really a wide field, right? From manufacturing of ocean-friendly products to sustainable fishing activities, to licensed sustainable tourism, to water and wastewater treatment projects, desalination plants, projects that reduce water footprints in the agricultural, residential, commercial, industrial sectors, but all the way also through to waste management projects in the shipping, port, and chemical sectors. So you see that this is a very wide range of eligible projects. And yeah, in summary, I just wanted to highlight once more that we think that blue bonds are where green bonds were about 10 years ago, that this will be a very fast-growing area over the next few years. And as we've just seen on the last slide, it's covering a broad range of assets and products that can come under a blue bond. So thank you for your attention, and thanks again to UNGC for the opportunity to speak.
Thank you so much, Andreas. And I think you, by this intervention, you really asked one of the questions that came up in the Q&A already. Is that could, for example, the port of Panama, the Panama Canal, be eligible for a blue bond? Of course, if it's a clear project with clear ambitions, you could issue a blue bond, both together with the global institution like the World Bank system, but clearly also with the private sector, banking and financial institutions. And that is a good segue to our next speaker, Nina Alstrand, Head of Sustainable Finance at DNB. And what do you think are the outlooks for blue bonds and the blue finance? Please.
Thank you very much. Thank you, Eric, and thank you very much for hosting this highly relevant and topical webinar. I'm heading up our sustainable finance team in DNB Markets, and sort of what we do on a daily basis is that we help companies issue sustainable bonds and loans, be it green, social, sustainability linked, or now of course blue, as is the topic of today. And our job is simply to help to guide the companies through the process, to put together relevant frameworks, as you've highlighted earlier today, put together material and simply translating their sustainability ambitions into a fairly standardized format. Of course, also liaising with companies that provide second opinions, and in the end, simply ensuring that investors have the information they need to make informed investment decisions, because in the end, investors will decide where the capital is going. And as Howard already showed, this market has, of course, seen tremendous growth over the past few years. Every year is a new record. And as he said, if we would see in 2020 in that graph, we would just be touching on last year's volume. Looking at only sustainable bonds, we've already quite far ahead of last year, despite the current pandemic, or perhaps in some way also because of this pandemic. The focus on sustainability just keeps on growing, but then not only with a focus on the E in ESG. And overall, sort of in my view, this market has been very much fueled by investor and consumer preferences that have been shifting over time. And investors, capital owners, they request more and more transparency. They want to know where their money is going. They want to see that the companies they support have a strategic direction that is in line with the Paris Agreement or the UN Sustainable Development Goals, not necessarily meaning that they are Paris aligned or dark green or dark blue today. It's of course equally important to invest in the transition. And I think if we look at the blue economy specifically, activity has been fairly limited, even under sort of the green label. We've not seen that much activity from ocean-related businesses. We have participated in a few transactions within shipping and seafood, and we have seen a few challenges when it comes to defining what is green, what is environmentally sustainable, because the green market is, of course, for understandable reasons, very much focused on reducing CO2 emissions. But if we, for example, look at the cases we've seen in seafood, then sustainability is not only about CO2. There are other factors that are very much important as well. And we need to create transparency around those factors as well. And for example, looking at ships who are dedicated to installing offshore wind, then perhaps fuel is not the only relevant item. We also need to place these investments within the relevant context. And I think this is exactly where this Blue Bond initiative can create a lot of value, providing relevant metrics, KPIs, to simply clearly signal what is environmentally sustainable within these particular sectors. And this will sort of be the foundation of issuing green bonds, help issuers, of course, help us, help issuers, help investors in the end to assess these types of sectors and investments from a sustainability perspective. And as was already said, we always need someone to take the first step. And hopefully, I think also that this initiative can provide relevant input also for the developing EU taxonomy. With new reporting requirements, capital flows might alter over time. But if we look at ocean-related activities, they have so far, unfortunately, been very much left out. Of course, this is a work in progress. More sectors will be added over time, but I think this will have a very, very much of a value in creating relevant metrics and transparency in the market. I think I might have used up my minutes by now, so I think I'll hand it back over to you. But thank you very much for inviting me to this interesting discussion.
Thank you so much, Nina. Very important points. I think it's really true what you're saying. It's not only about the E in ESG. We have to keep the S and G there as well. It's about developing good matrices, good KPIs, good targets for all the ocean industries to align on. So it's easier for all parties to agree if a transaction is green or blue or sustainable. Our next speaker, Sylvain Taboni from BNP Paribas. As some of you may know, they launched this ETF fund, Exchange Traded Fund, a blue sustainability fund, just some weeks ago, part of their very holistic and large sustainable ocean ambition. And Sylvain, you will give us a brief glance of your thinking at BNP Paribas. Sylvain, please, the floor is yours.
Thank you, Eric. So I'm Sylvain Taboni, a part of the company engagement team at BNP Paribas, which is basically the sustainability team in our group. So at the largest European bank for corporates, we do finance the business on a large scale, and we know that the business harms nature and especially oceans in a number of ways. We know it is our responsibility to contribute to change the game with our clients, our competitors, with our regulators, and all stakeholders, such as NGOs. And last year, our bank stated a new position on ocean that supports a sustainable blue economy through 4 pillars. Support innovation that lead to a more sustainable blue economy, with a direct investment strategy of $100 million dedicated to startups and new solutions. Partnerships with innovation platforms such as the Sustainable Ocean Alliance, the Solar Impulse Foundation, to foster young entrepreneurs. Second, that we really aim to move the needle by collaborating with think tanks and networks to raise awareness and promote best practices in the economy. The third one is that we committed to support research for a better understanding of the ocean through the Climate and Biodiversity Initiative led by the BNP Paribas Foundation and our partnership with Pure Ocean. And lastly, and probably the most important, is that we really want to support the implementation of best practices through positive impact banking solutions and services. By one of the bold moves of the group was to commit 1 billion euros to green shipping by 2025. And as you mentioned, Eric, the BNP Paribas Asset Management Blue Economy ETF that is investing in 50 large-cap companies connected to sustainability in the oceans. So to enter to the question, why issue blue bonds? First, we thought that private investors secretly like to have an environmental and social impact in addition to strong financial returns. And the preservation of the ocean is definitely a very hot topic in their agenda. And a recent study from Credit Suisse and Responsible Investor shows that over a third of large institutional investors see the sustainable blue economy as one of the most important sustainable investment topic in 2020. But another study from OECD shows that oceans remain one of the least invested themes across impact investors, and due to the lack of available solutions. So in this context, we really think that blue bonds can appear as very attractive for investors.
Very good. Thank you so much, Sylvain. It's been a great following BNP Paribas. You're very ambitious in your work. I think the ETF fund, it will be interesting to see. It's, as you said, it's the asset management arm of BNP Paribas who launched that. And I think that's a very positive and optimistic indicator. We also have the Rockefeller Credit Suisse fund that was launched a few weeks earlier. And we know there are multiple investment vehicles coming up later this fall and winter. So that's very encouraging. But how do we avoid this being greenwashing, blue washing, sustainability washing? So let's hear from some of the second party opinion agencies. First out, Tom Evanson, Director of Sustainable Finance at Sustainalytics. What is your take on this opportunity to grow a market like this?
Well, we're certainly seeing a lot of interest, and the opportunity to grow the market. There are so many use cases, as I think my colleagues at the other third-party opinion companies like Cicero and Vigeo also on the line will notice there's a lot of opportunity for blue bond focus use of proceeds or KPI approach on this. I think my main message here over the last couple of years watching this whole market in sustainable bonds grow is that it's not as hard as it looks for the potential issuers to get involved between the multilateral banks and support from groups like IDB and IFC, as well as the investment banks that are helping doing the underwriting. There is so much support to make sure that once these bonds get to actual market, they are well structured, the taxonomy is in place, and almost all of our groups combined, as I believe Andrea said, it takes a village to do this. There is investor demand. All of the service providers in this process, capital markets through third-party opinions, are happy to, I don't want to use the word consult, but certainly cooperate and give as much sort of open sourced information to make it a success. And I want to encourage anyone listening to this call to look at this. I think the blue bonds will be very eagerly adopted by the investment community out there. And since they're already based on global principles, like the green bond principles, nothing seems to be looking to stray away from that. I think it will be very successful. So I think that's my main point. And my colleague on the line, more on the research side, we did, to help encourage this, we did launch our transition shipping framework, which we, I believe, sent over to some people. Again, it's a guideline just to encourage people to look at this and to give people things to think about if they want to move in this direction. And I'll stop there as a beginning. Thanks.
Thank you so much, Tom. It's always great to listen to you and work with you. I think transition is, of course, a big part of this. It's a big challenge. It's very different from sectors to sectors. Offshore wind is already up and running. Shipping has a long way to go to decarbonize, need a long transition phase. In aquaculture, you have different challenges that need different KPIs. This is something you have worked extensively with at Cicero, of course, on the shades of green and really trying to understand how you can facilitate better financing of this shift. Håkon Selen at Cicero, please, the floor is yours.
Thank you very much. Thank you for the opportunity to speak at this very interesting event. So we have provided several SPOs on green bond frameworks issued by ocean-related companies. And all of this activity has actually been within the last 12 months. So we see that it's really now taking off, and we expect quite a few more coming soon. So we have worked on aquaculture, shipping, and fisheries in that order by volume. And we see a lot of interest, particularly in aquaculture, followed by shipping for new issuances. And therefore, we have worked on developing competence and methodologies specifically for aquaculture and shipping. And we will publish 2 sector briefs covering these 2 sectors. They will be issued within this year, and they will hopefully be valuable both to investors and also to potential issuers. So we have an overarching methodology, which we call Cicero Shades of Green, which has 3 shades: dark, medium, and light green. And we find that this differentiation is particularly useful in shipping and aquaculture. As Eric mentioned, there is really no dark green solution yet for long distance shipping. So by having the lighter shades of green, we can also identify the more long-term transition, taking steps in the right direction. This has also been useful in aquaculture, which is a sector that faces a multitude of environmental challenges. So here we're not only talking about climate, but also the impact on the local marine environment is very important in our assessment. And we have also focused a lot on the feed ingredients. So a supply chain focus, which links both to exploitation of other marine resources and to agriculture and land use change in the form of deforestation. And we have also considered transport of the final produce, in particular air transport, and energy use, which is something that is important to many sectors. For aquaculture, for traditional aquaculture, that's actually a minor part of the picture. But with land-based aquaculture, that the picture is a bit different, and energy is actually quite important. So that was, I think, my 3 minutes. So thank you.
Thank you so much, Håkon. Thank you so much, Håkon. It's very important to have the third or second party opinion verification process. I think especially when you build a new market like the blue bond market is. And it's also important, as you mentioned, energy might not be a big issue for aquaculture, but still what we see is that what is the modality of producing proteins on land contra producing it on sea, and what are the benefits? One thing is to measure individual sector or individual companies, but how to compare them with other modalities. So this is a work in progress, as you say. We're looking forward to your publications. And it's good now to move to our next speaker, Renate Kårvik, Global Finance Officer at Grieg Seafood ASA, one of the operating companies. Renate, please.
Yes, thank you so much. So I will try to pick up from what both Nina and Håkon said, because we're not only focused on CO2 emissions, we have a lot of other challenges as well. So my name is Renate. I'm the Global Finance Officer in Grieg Seafood, and I'm also responsible for our green bond framework. So Grieg Seafood is one of the world's largest salmon farming companies. We have farms in Norway, Shetland, and in Canada. And we are listed at the Oslo Stock Exchange. So what I will try to do now is just to give you a brief introduction to our path to issuing a green bond, which we did this year. So salmon farming is the fastest growing food production system in the world. It has a low feed conversion ratio, high edible yield, and a low carbon footprint. However, we do have some challenges in becoming more sustainable, as has been mentioned here. We need to reduce our environmental impact and protect the biodiversity where we operate. We still need to improve in animal welfare, not only for our salmon, but also for clean fish. So clean fish is used to keep sea lice levels low. We, or the industry, need to develop more sustainable feed ingredients. And we need to cut carbon emissions and also to support the circular economy and recycle more resources. We are committed to playing our part in solving these challenges. So we have incorporated this into our sustainable business approach. And as we see it, there is no contradiction between the healthy seas, healthy fish, and financial profit. And that is also what we try to demonstrate through this business approach. And this is also the foundation for our green bond. So our green bond is mainly focused on the healthy ocean and sustainable food pillars. And our healthy ocean pillar includes optimizing fish health and welfare, controlling sea lice levels, avoiding escapes, minimizing local emissions, and minimizing impact on wildlife. And in the value chain, it's about sourcing new feed ingredients and taking actions to reduce our carbon emissions, and that's both for scope 1, 2, and 3. And knowing the effects of climate change and recycle our waste. So with this existing sustainability framework, we had a very good foundation for pursuing a green bond. And the use of proceeds from the bond is all about managing these challenges that I just mentioned. And we used CICERO to get an independent assessment of our framework. We had a very good dialogue with them, and they were excellent in challenging us, both in terms of our own operations and also in our supply chain. And that is good. We like to be challenged because that is what improves us. So we set new targets and new KPIs during the process. One of the things we did was also to exclude purchase of feed from Cargill Aqua Nutrition from the bond proceeds due to deforestation risk related to their mother company Cargill. So the assessment that CICERO did, just as Håkon said, is an external opinion of our green bond framework, and it includes our policies and processes. We ended up with a green shade, medium green, which means that we are heading in the right direction when it comes to reducing climate risk and impact. The green bond process itself was quite fast. We started in May and we ended in June, so it took actually less than a month to complete it. The bond issue was 1 billion NOK, and it was significantly oversubscribed. So I would say it was a success, and we're quite happy with the results. Thank you.
Thank you so much, Renate. It's really a success story. I think it's a very good example of how the industry gets recognition from very concrete measures that you're doing. And this is something that investors and the finance market at large is really looking for. And we really encourage more companies to do the same. We'll hear from another sector now. We're going to move over to Odfjell, SE, shipping company, specialized shipping company. Gustav Sandem, Vice President of the International Primary Markets. Gustav, please.
Yes, I'll be starting. My name is Øystein Jensen. I'm the Chief Sustainability Officer, and our Vice President for Finance is joining me. So we'll share those minutes there.
Really?
I'll do a brief introduction here. And about Odfjell. We are one of the world leaders in the global market for seaborne transportation and storage of chemicals and other specialty liquids. We have a more than 105-year history, and we have a long-term perspective on how we do business. So sustainability is really deeply rooted in our DNA. We handle some of the world's most hazardous liquids, and we transport them also through some of the world's most vital and fragile environments, the oceans. So, and our terminals also, they store products close to people's home and local communities. So there are emissions, soil contamination, water pollution, they can have a potential of adverse impact to people and ecosystems. And this means something to us. It is a great responsibility that we take. So we believe that the climate change poses a severe threat to society and business, and failing to live up to these expectations, failing to comply with regulations, and failing to operate in a sustainable way that presents a significant risk to trade locally and globally. We believe also that the climate risk affects all business, but climate change can also create many opportunities for those who are able to adapt and willing to work and mitigate it. That is why safety and sustainability are an integral part of our business. It's imperative for the sake of people that we take care of the environment around us. We embrace this responsibility that we have, and we do what we can in order to reduce that risk. So in our impact statement, it's an integrated part of our strategy. At Odfjell, we recognize that our company has an impact to the environment, to the people, to societies, and we are committed to operate in a sustainable business, continuously seek improvements, and actively support the achievement of the relevant UN Sustainable Development Goals. So we've been a signatory to the Global Compact since 2011. We endorsed the Global Compact Sustainable Ocean Principles last year. In 2018, we presented our approach on sustainability strategy in the document Global Operations, where we further elaborate on the materiality and focus areas. This document is available on our website if people are interested. Efficiency, fuel consumption, and emission, that goes for us hand in hand. To improve fuel efficiency and reduce fuel consumption and emissions, Odfjell has a constant focus on improving and renewing our fleet. This includes investing in new ships, optimize data-driven decisions, deploy retrofit programs, invest in new technology, and optimizing the way we operate. Since 2008, we have run several environmental and efficiency programs, resulting in an almost 30% reduction of our carbon intensity since 2008. This means that we have already taken several big steps towards the IMO targets. Further reduction poses even bigger challenges, but we are committed to continue improving and have a set of new ambitious targets which will go beyond the targets of the IMO strategy. These targets will be made public next week, so stay tuned.
Very good.
Slightly about the risk. Setting ambitious targets and ambitious action plans to achieve them is not only because it's the right way to do for the environment, it's also risk mitigating and good for business. Having high standards, clear strategy, and full transparency, as we mentioned earlier, on what we do on mitigating risks, also on social and governance matters, is not only driven by compliance. We do it because it's the right thing to do. We know that this is also appreciated by our employees, owners, investors, and customers. In Odfjell, we have set at a high standard on ESG reporting because we know that stakeholders want to know how we manage risk and how we perform on sustainability. We believe that our commitment to setting high standards, ambitious goals, and reduce risk is even more clear if we demonstrate this commitment by linking these targets also to financing. Our thinking is that this responsibility and commitment to sustainability will also make Odfjell more attractive to investors and the finance market. And on that, I'll leave the word to Vice President for Finance in Odfjell.
Okay, so thank you, Øystein, and hello, everyone. At Odfjell, we're a frequent issuer in the Nordic high yield markets, and we currently have 3 bonds outstanding for a total of 2 billion NOK. We also have a financing relationship with most of the major shipping banks and leasing houses. We very much support the idea that markets can play a key role in encouraging companies to act sustainable. And we would like to support initiatives to further drive this development. And we believe really that sustainable financing will become the norm. We're not there yet by any means, but there's already increased recognition from a lot of investors, and particularly in the investment grade space, that ESG factors are indeed risk factors affecting the value of a company. So to us, sustainable financing is simply efficient risk management, right? As Øystein said. So what we've done is that we've developed a sustainability-linked finance framework following the principles of ICMA and the various loan associations for sustainability-linked bonds and sustainability-linked loans, which includes, among others, second-party opinion from a third-party industry expert. And this framework is linked to our climate targets, which, among others, support the UN Sustainable Development Goal 13, climate action, and more specifically the decarbonization of shipping, which is also one of the tipping points in the Ocean Stewardship Code. So as such, the framework, and we have not issued any securities under it, I should be clear about that, but the framework is in our opinion also in line with the current guidance for blue bonds, which we think is extremely interesting. So what do we expect from the financial markets here? Well, our sort of a dilemma, and it's been mentioned already, sort of the transition when it comes to sustainable financing is the lack of pricing comparison between sustainable bonds and vanilla or brown bonds, if you like, especially within high yield. And if you think about it, there's no reason for a big pricing difference from a pure financial risk perspective. Yet we are starting to see that green curves are settling down below brown curves, which is probably driven by an increasing number of investors actively seeking an ESG label, and also the recognition, as I mentioned, that ESG factors are indeed also risk factors, if not pure financial risk factors just yet. So it would be nice to if this pricing difference or greenium, if you like, was a bit more apparent, especially to potential high yield issuers such as ourselves, as we believe that's likely to catalyst the market for sustainability linked issues and hopefully also blue bonds in the very near future. But thankfully, we are seeing sort of a wider acceptance of the pricing mechanisms and features in sustainability linked securities. But I think very quickly, just to sum up, at Odfjell, we're ready. We think sustainability-linked securities and blue bonds are very exciting, and we believe that our efforts and commitments to sustainability is very important to our business. It mitigates risk, but also opens up for opportunities, and we hope to see that this will also be reflected in the pricing of our future securities.
Thank you so much, Gustav and Øystein. I totally agree with you. It's about risk understanding and measuring risk. And the whole shipping sector, of course, is in the very starting phase of a major transition. And how does this look for the big stock markets out there? To tell a bit more about this is James Johnston from Euronext, the VP of International Primary Markets. James, good to have you with us. Our last speaker, but the most important one, because this is where everybody wants to end, to be listed and have a good rating. James, please.
Thank you very much, Eric. And it's really great to participate today. And I think very beneficial to hear so many interesting perspectives from different parties, and in particular the banks who will put these deals together and potential issuers who will lead the way. There's a collective determination clearly from everyone on this call to bring attention to the underfunding of ocean and marine SDGs and to address this funding gap through the bond markets, and not least by encouraging development banks and issuers to begin issuing blue bonds and help support and develop the blue bond concept. During our last session, we highlighted some of the areas that need to be addressed in order to kickstart the market. So, for example, can credit enhancements from sovereigns and development banks potentially be put in place to effectively guarantee repayments on a blue bond and lower the cost of funding for issuers? And how do we engineer commitments from those entities? We also discussed, can development banks themselves commit to both issuing and investing in blue bonds? And I think this sector needs support from development banks in order to build confidence and credibility for the blue bond concept. So the blue bond reference paper from UN Global Compact is an excellent roadmap for a prospective issuer. And again, this needs to be augmented with tagging of blue and possibly within existing ICMA principles. This would most likely lessen the additional risk that comes with educating and familiarizing investors with a product that does not yet have a distinct place within widely recognized industry standards. So the best vehicle to get this work done, and as mentioned on this call, is through the ICMA Advisory Council and Executive Committee, and it would certainly be good to get this on their priority list, and if completed, this would most definitely make a banker's job a lot easier to market and develop a distribution strategy for a blue bond. I also think stock exchanges have an important role to play in the development of blue bonds, in both providing the infrastructure to bring issuers and investors together, and also in allowing efficient capital allocation to sustainable ocean and marine investments. Stock exchanges also have a wide-reaching brand presence and have a meaningful, I think can have a meaningful impact in bringing the blue bond concept to the fore of ESG discussion. I also mentioned during our last session that Euronext have taken a very thoughtful and deliberate approach to our ESG strategy, and our offer is designed to help investors identify listed products that meet transparent ESG criteria. So during the summer, we became the first stock exchange signatory of the UN Sustainable Ocean Principles, and so contribution to the development of blue bonds will remain a focus for Euronext. There are currently over 400 green, social and sustainability bonds listed on Euronext markets in Amsterdam, Brussels, Dublin, Lisbon, Oslo and Paris. And we are of course very keen to include blue bonds in that mix. And should a blue bond issuer choose to list their bond on Euronext, we will certainly do everything at our disposal to raise the profile of the issuer and the blue bond both before and after issue. So we'll work with an issuer and their advisors to do whatever it takes from a PR perspective. And of course, this means also including the blue bond on our Euronext ESG bonds platform, which was launched in November last year and now includes over 200 billion in issuance. So for all blue bond issuers, I would definitely encourage listing the bond on a recognized stock exchange as opposed to taking the private placement route. The basic 4 steps to listing are: you choose a listing venue that's recognized for efforts in ESG, such as Euronext, where ESG is a key part of our strategy. But of course, there are other stock exchanges doing great stuff in this area. Secondly, a law firm prepares and submits an offering circular roughly 4 weeks before a planned issue. Then the document is approved and listed, and this normally coincides with the issue date. And lastly, the bond can now be distributed to investors who require that the bond is listed on a recognized stock exchange. So the main reasons that blue bond should list on a stock exchange is to widen distribution and to give issuers the optimal environment to reach insurance companies, pension funds, central banks and financial institutions. So the first question an investor will ask is whether the blue bond is listed on a recognized stock exchange. And this is for a number of reasons. Firstly, investors who purchase listed bonds can generally avail of withholding tax exemptions on coupon payments. And secondly, investors are subject to their own strict internal mandates and can only invest in listed securities. So that's a brief overview from a stock exchange perspective. And I think engagement at industry level needs to continue, and everyone recognizes the fantastic role that Global Compact are playing in this regard. And Euronext are very happy to do whatever we can to raise awareness and marketability of blue bonds, in particular to assist in getting recognition of blue bonds within existing ICMA standards.
Thank you so much, James. And and thank you so much for those encouraging words. Very good presentation. I think it's extremely important to have the whole value chain in the finance market to make sure that these instruments are high quality and broadly recognized globally. Going forward, there are some major events coming up next year. It's the UN Ocean Conference, and we have the COP26. These are 2 major events that, of course, where we will highlight the importance of the ocean economies to deliver on the SDGs and the Paris Agreement. And we will showcase how the finance market is addressing this through green, sustainable and blue bonds. We will work with ICMA and the committees there to really develop a very strong matrix for blue bonds. We will also work with the EU green taxonomy groups and other international bodies, the World Bank Group, to really mainstream this work. And this has been a great starting point. And thank you everybody so much for taking part in this meeting. I also encourage everybody who have not done so to sign the Sustainable Ocean Principles. It's about committing yourself to that you are aware of your footprint, you have a strategy to do something about it, and you're able to disclose your interaction with the ocean. Join us in the UN Global Compact if you haven't done so. We have both a finance platform and the ocean platform, and this is where the thought leadership is taking place in this sector. And many of you are already members, and it's great working with you on this. And looking forward to continue that work going into 2021. So again, thank you so much to all our panelists. I've learned a lot. Download the practical guide. Reach out to us if you have any questions, and reach out to the panelists as well if you want to issue a blue bond, if you want to list it, or you need a second party opinion verification of the process. So again, thank you so much for taking part, and thank you so much to all our speakers. Have a good day.
Thank you.